Good afternoon, everyone. Welcome to Master Trader Live. Today, we're going to be talking about your trades. So if you want to post them and you can tell us why you like the trade, of course, what's the symbol? We need to know what time frame you're looking at, or whether it's multiple time frames. Some detail as to the trade that you like, and why you're doing it. And then we can review with you how we look at it. And kind of the idea is to improve and help you um, make more money by applying the concepts that Dan and I use every single day. So I don't know if you made any slides, Dan, if we need any here, but we're going right to the charts.
All right. Yeah. Good afternoon, everybody. Yeah, Greg, I did. I obviously did put together some, and I just put together some key ones that show our repeated, as you call it, factory work, what our approach is, key concepts of what we're looking at, and then we'll go obviously to answer people's questions because they're going to hear us applying these key concepts over and over again. This is a one that many of you are very familiar with, or you should be. Every single time that we look at a trading opportunity, these are the concepts that make up our method. And these are the things that you're going to hear us talking about when we answer your questions. No pattern, no trade. And that's on the time frame that you're trading. So if you just give me a symbol, most of the time, if you're trained with us, I can pretty much know what you're looking at, but many times I don't. And I need to say what pattern and what time frame. So if you can't even get past that, we have nothing else to talk about. Then we can talk about quality of that first bullet. What's the trend and the quality and support? Where's a reversal occurring? What about multiple time frame analysis, retracement, relative strength, weakness, green and red bars ignored? Let's just wait till we look at real ones. This is what Greg says all the time. A derivative, a oscillator is a derivative of price and volume, and it just confuses. It's a mess that many in the industry, unfortunately, just want to peddle as some type of proprietary nonsense. But you're going to see our charts. Everything is clean candlesticks, couple moving averages and volume, and that's all you need. If everybody can put their drop down, all panelists and attendees, so everybody can see how we're answering. This is just a great candlestick chart that we're going to now put into context of using all of those other concepts that make up our method. But every one of these pictures are bullish in and of themselves. And when we now apply those other concepts, if it goes through our checklist, we're going to say, yeah, we have a high probability trading opportunity right now.
So on that slide, Dan, that we always review, one of the reasons for the explanation of this slide is that early on there's such a proliferation of information on the internet and in books about trading and candlesticks. And one of the things that I struggled with, which is everything that Dan and I teach, are of course things that we struggled with at one time, and then we're able to make sense out of it or clarify it. So the essence of this slide was, I thought I had to see that particular candlestick pattern, whatever the name was, and I didn't see it, and I would miss trades. And then I'd say, oh, it was on this time frame chart. So I just started looking at so many different time frames, and it just led to more confusion. And then the light bulb moment of, hey, this is just about compressing and expanding data through time frames, and it's about retracements. So, well, we see these different patterns. The bottom of in this slide where it says condense any, and no matter what you call it, it's going to go up. It's the understanding of, that the bullish 180 reversal. Well, it doesn't have a little bar in the middle. It doesn't mean that it's different, really. It just is somewhat different, but it still means it's going up. So the idea is everything we do is focused on simplification, and you can't simplify without understanding it. Right. So you just cannot say, well, I'm not going to use this because I want it to be easy. No, once you understand that it means the same thing, well, then yes, you can. And the less you look at, right, the more, less is more. Let's just leave it at that.
Yeah, and so this is one of my favorite comments of yours, Greg. This, you put this great slide together. Call it what you want. I mean, many people say, "Oh, that's the flying dragon," so it's going to do this. Well, maybe, maybe not. It depends on what applying it to all our concepts. But this is a 3-bar reversal. Call it what you want. That's a bullish reversal.
Right.
I just see something perking over here on my other computer. G-Sky, it's on our watch list. So here's another foundational slide. Once you can identify, which is very easy to do if you follow what we teach, you will know if whatever you're trading, what trend it's in. And when that trend breaks, and then if we teach you, step 1, if you can identify this, step 2, then we tell you what tools, so to speak, to use in every one of these, then again, it goes back to simplification. One of our key concepts is trend and trend quality. This is a beautiful uptrend. And you say, okay, well, how do I know, Dan? Give me some meat. Okay, here's the meat right here. We have higher pivot highs, higher pivot lows. We have a beautiful rising 20 over a rising 50. Gaps are left unfilled. Controlled candles, not wide and whippy, overlapping. Red bars are ignored. Look at this. Red bar, red bar, red bar, red bar. They're ignored. This is a powerful uptrend. They retrace through time instead of price. They're consolidating at resistance. So here's your meat and picture of what a beautiful bullish uptrend is, trend quality.
That one hardly retraced, Dan. I mean, like it didn't pull back.
Right. One.
Yeah. And that's an attribute. It says sideways rather than retracement. But how, we think, well, how do I get on board on that? Well, one of the concepts of candlestick patterns that you saw on the prior slide was a plus 180. So within that plus 180, that red bar was a retracement and a multiple bar retracement on a smaller time frame, but then it went right back up again. So this slide reinforces that prior slide, is that, well, if I get a bullish 180 within a base and it's in an uptrend, well, that's something that I can take a position in, even though it didn't pull back. And, as I said, everything that we explained to clarify is something that we struggled with. And I can remember, Dan, way back in the day when I first started learning, and I was like, here's this pullback to support, and it forms a reversal or bottoming tail bar. And that just works so well. And then I think as possibly as the internet evolved and people started to learn more and got more aggressive, that pattern didn't happen as much. So the struggle was, how do I get on board this thing? Which forced new learning, like bullish 180s and breakdown failures and so on. It's like the easy pattern that was the bread and butter. Well, it's not there. So, through struggle comes new advancement.
Right. And hence, we've done some wonderful MT lives on continuation patterns, breakdown failures, shock patterns, all covering exactly what you're talking about. All right. So here's a beautiful trade. Sideways, break down, snap right back, consolidate resistance. This is applying everything in our checklist. This thing closed, closing new high. You look to the left, there's no resistance. It's a no-brainer. You put on the trades, calculate share size, and manage in between. Another example of what I just mentioned, a shock pattern. This red bar totally communicated lower prices. Gapping under, closing well below resistance. And then the very next day, that's Greg over here. If you're in it, if you're not in it, it's a happy face, because Greg, you are the author of Advanced Gap Trading Strategies. Tell them why you would be salivating this gap day.
That's like go for it. Pretty almost all there is that there's a huge surprise element to it. And that wide range bar breaking down is something that's not supposed to happen within a trend like that. But we know sometimes things like that do happen, whether it's news related, maybe some other stock in the sector, who knows why.
Right.
But the next day, it gaps above the base. Shorts are caught. People that are long that held through that have such a relief that we're going to think about selling. They're not. So, and new people will add to it. So every chart we look at tells us what other people are thinking. Right? It's not about haram eyes and dark cloud covers and morning stars or whatever. It's about what you and I did with our money and what are we likely to do. So that is a picture of shorts are screwed, right? Longs have relief. And the effect of all of that is a lack of selling and a fuel of buying through short covering, and new people that see the chart, they're going to buy, and that increases demand.
Right. And the news, it could have been earnings, it could have whatever. And you got a bunch of new buying is what the chart reflects also.
Right. So they don't happen every day, but when they do, by recognizing it and understanding it, you can act in the moment. Whereas if it's something new to you and part of these, MT lives, or to show you examples of this to where you can act on it. It's not, oh, this is something completely new. What is that? Well, no, you're seeing it. So you should, you learn how to take advantage of it.
Yeah, and you know what, Greg, we you hear me talking about the 4 stages of learning, of anything, being a doctor, of stock trading, and it has to start with an intelligent approach, obviously, which is what we do, and then the seasoning, and you also hear me with my silly analogies of Halloween movie part 97. The guy's in the house and the scary music and he's coming around the corner. I mean, we've seen this picture 100 times. That doesn't mean that Michael Myers will kill him this particular scene, but we go through our approach and you put on the trade and manage in between. All right, a couple more slides here, folks, and then the rest of the show is all for you. Come see us in the Real Trading Room. This is where you see us apply everything we're talking about in every one of these MT lives in a live market environment. We purposely like to end our instructional commentary in time to allow us to do that every single show, so we can pull up real charts and apply the concepts, but we're gonna have more time for that today. But take a no-brainer 7-day trial to our live trading room, and you will see what we do every single day. Just another example of going through our checklist, and that's what we're going to be doing today. Beautiful, beautiful gap, wide range bar. This is a 1, 2, 3 continuation. So for a swing trade, it looks fantastic, both on the gapping day and on the continuation for a swing. Here's the gapping day. Another beautiful gap trade, beautiful. So again, you need to print all the concepts that make up our method. And this 15-minute chart is in real action. End of day base, bullish gap up, bottoming tail, range expansion after the first 15-minute bars, bullish time consolidation, red bars ignored, breakout, red bar ignored. So and it's this whole day right here makes up this wide range bar. Just another example here that this actually is an open trade of ours. Core trade, we've been in this, as you can see here, on February 12. We bought it at $5.86 on this wide range breakout. We're going to be talking about multiple time frames here today. And you know what all these bars mean. Price void means look to the left, there's not significant resistance. And we had a target of 10 bucks. And I think it gapped up to 10 bucks this morning, Greg, actually. This is how we are going to manage our positions for big, intelligent, objective profits. We'll show it to you in real time, but just assume we enter here, it gets extended, you can sell half, you have to let it retrace and pivot. Then you can trail pivots until it gets extended. And as Greg likes to say, you know, target 2 or near its destination. Then you go back to trail mode. So just in 20 seconds right there, I gave you an amazing objective methodology to trail your profits instead of, oh my gosh, it's retracing 10 cents. And what do I do right now? If Debbie's listening, Debbie, you know, we're still in URA, 100% of our position, up 35% by following this slide right here.
I marked that down so everybody knows what a pivot is, the way we define it. It's just simply 3 higher low bars to the left and right is a pivot low. So when we're trail stopping and we say, I'm going to trail a pivot, well, that really means that I have to wait for 3 bars on the right for it to become a pivot. And so you're going to be sitting through, you know, if this is a 15-minute chart, you're going to be sitting for 45 minutes and then into the next bar, waiting for this to form for you to move your stop. And, you know, for some, that could be easier said than done. But once it does, we've got a very strong reference point that, hey, if this starts pulling back, I'm sitting with it. I'm sitting with it. I'm sitting with it. Now I'm in what I call intelligent hope mode. I'm like, shit, I should have taken my money. Right? And then maybe you do, but now it starts to make a higher low and it pivots. And that's where you're trailing. But you can see over here, there are no pivots. So this is a much stronger move than this one was. So as it starts to accelerate, we can start trailing prior bars lows. So, you know, this is all part of, you know, swing trading course, money management course in much greater detail. But just teaching you a candlestick pattern isn't trading. Money management is the key to make money and keep money and exponentially increase what you can make with your money.
Yeah, I mean, I like your distinction there. It's make money and keeping money.
Yeah, I mean, you know, that's a lesson that everybody should learn or think about in life, even beyond the markets. It's one thing to make it; it's another thing to keep it.
Right, right. All right, one more slide, and then we're ready to go. So I've been talking about our everything, our approach, et cetera, key concepts, and we trade stocks and options around our approach. And this is just one little slide here. We love selling credit spreads using our approach. All we do is find a beautiful pattern, beautiful turn. We sell a put under support, buy it further out of the money put. That credit that hits your brokerage account, that's your maximum gain, and all it has to do is at expiration close above of the short strike. And we love those patterns. This you can check it out later. This is Greg's amazing swing trading course. Everything I just covered, other than options, puts all these concepts together in a module thought building process. So at the end of the course, you have what I call conscious competence. And then it's just a matter of following your trading plan and getting experience to try to get to the unconscious level of trading competence. So good, we've got plenty of time. Let's now turn it over to Greg to pull up the charts, and we will answer and look at anything that you would like us to.
I made note of what was posted, but I'll take them in the order of which they were posted. And then anyone else that wants to add more, we'll look at that. Let's see. I'm showing TC 2000, Dan. Didn't highlight in green.
Yeah, I see it. Yep.
Okay, cool. All right, let me get Sam.
Well, I see a big daily and just the top of the bottom two.
Yeah, because I squished them down. If we want to look at multiple time frames, then I'll expand that.
All right, take Sam. Sam's first.
Well, no. I don't know who the names were, but I copied them as they were posted when we first started. So the first one was said, can we look at Riot? And said it had a rapid rise over the past month. The question is, does it still have room to go? Well, that's an easy one. Right? That's an easy one. Does it have room to go? Room to go, that doesn't mean it's going to go there now. Right? So
no, Room to Go is a retailer down the street.
Yes, it is down in South Florida. So does it have room to go? Well, yeah, because look, there's nothing to the left. And if we go out to the monthly chart, wait a minute. This thing traded back in the day and got destroyed. And look, and it's come back. Reverse splits. What is that? 1 for 5. What is that? I can't see. My mouse is over there. 1 for 6. 1 for 8. Boy, that monster move on that daily chart looks like a little blip out of nowhere, but will it ever get back up there? I think it's unlikely.
Right, highly unlikely.
Yeah. So does it have room to go? Sure does. Is it likely to go there tomorrow? No. So this kind of a run is a climactic sell setup. And I did a chart of the week on that. You can go to the website, click on chart of the week and read it. Get a little video with that. So when prices get this extended away from any price support, it's likely that it's going to pull back. And this is likely that it's going to pull back. So going long here, reward to risk, well, not very good because you've got no place to put a stop. So it held up relatively well today, considering the size of the gap. But this is the way MJ started, right, Dan, and Tilray, whereas they ran up and they gapped and they formed bottoming tail bars as they came into the gap fill, just like this. Right,
Right, so
that came further, but you can see, and then they rallied back up, and then the next day, which in this example tomorrow, will be the day that the sellers show up.
well, and so let's finish with, like, showed them bull put credit spreads. We do bear call credit spreads. So tomorrow, under the first 30-minute low, so to speak, or I'll pick an intraday entry, we will sell an out of the money bear call credit spread over today's high.
Yeah.
And we keep that money as long as it doesn't keep going higher. So it can go sideways, it can go up a little bit, and it can go down, and we keep the money.
And you could do a bearish debit spread.
Sure. Yeah. For short-term swing. Sure.
mean, look at it. Look, I mean, what I did the chart of the week on was the next day was really the money day because it didn't pop back up again. And then the sellers really started hitting it. So, the gap up day seems like, okay, it's a no brainer. But sometimes the buyers don't give up so easy. And so they haven't given up so easy here. So tomorrow could be the real payday for this thing.
I agree.
We'll keep
Or, well, just to add one more thing, and then let's move on. Let's
Yep.
say it gaps up $20 tomorrow.
Yeah, might.
And we'll do it again. 30-minute low. We'll do it with a stop over the high of the day at the time.
All right. Okay, the next one was, oh, whoever posted that said their cost basis was $5 in Riot. Sell a covered call. All right. I didn't catch the last part, that last comment there, but this could go higher and it could be buyers on a pullback, but it could pull back significantly. You've got a
Right.
monster profit in this thing.
Exactly. So even though you're selling a covered call, if you and I would rather be short,
Yeah,
well, you got to think about, do I really want to sit through a $20 pullback?
right. I mean, you got a monster profit. You could take a little bit of that money and buy a put.
I would
It's
put the money in
insurance,
my
right?
pocket.
Insurance. Yeah, you might, totally lose it all. But if it goes down, CODX. Daily buy setup yesterday triggered. It is a little extended, I think. What do you think about it? So this is a little extended. It reminds me, I don't know if Abdul is in the house here, but he asked me a question about an intraday setup on a stock just before. Yeah, Abdul. So you had asked me about a buy setup, and this isn't exactly the same thing as what we just talked about in the green room. But what I mentioned, and with this, I would not be surprised to see this come down and make a lower low, which would be a much better buy setup because this did get a little extended. It came down to the support here, but the angle of retracement is sharp. And so if this came down into this area, made a lower low and turned, I think it would be a great setup. And the weekly chart probably be a very nice buy setup. And it would be a pullback here. All right. Multiple bar pullback. And so we'll see if that's set up. But the thing here, this kind of setup that gets it a little extended and comes down this way, I like them making a lower low. And then, like, if you could take this couple of bars down and pull these 2 bars and put them over here, that would be a nice setup. Daily chart. Would you jump? All right, let me just save this. So we got a nice number of things to go through here. I don't want to miss the people that posted early. So is yesterday Doji signal an SQ to short it? I would not short this on a daily time frame as a swing trade. It's in an uptrend. It's really not that extended. I mean, all of this consolidation, you could get a red bar ignored here and flip right back in your face. But as a day trade, you could do it. You could have that as a bias. See the 5-minute? There's your sell setup right there. And so this is my go-to setup on the 5-minute chart. Prior day's close, today's open, downtrend, 20, 60 is the same as the 20 on the 15. So I know on this setup here, the 5, the 15, and the hourly are showing weakness. And it's into some resistance. So you could have a bias intraday. That's my rule. If you wanted to swing short it, that's up to you, but I wouldn't do it. Well, you can take this one down, URG. It says the daily closed at an all-time high yesterday with a wide range bullish bar, an increase in volume. Bought today.
Well, if it happened, and I showed you a bullish 1, 2, 3 continuation on one of our earlier PowerPoints. If this happened to have given us an inside day today, staying in the upper third of yesterday's wide range bar, then I would say I would like it. But it just kept going, and now it has a big topping tail and under the open, so it needs time to heal and settle down and set up a new pattern. But as long as I see the weekly bottom left is breaking out, so I would put it on a watch list. And people in our green trading room sometimes hear me saying, hey, this has potential and it may take a week to set up for a pattern that I'm comfortable of entering for the risk to reward. But it's worth watching.
So Dan, the way I read the post, it seems like a statement, not a question. They bought
I
it
thought
today.
he was saying what to do today based on yesterday's close.
I'm not sure. It just says bought today.
Oh, okay. Well, then if you bought today, then fine. Your stop's under yesterday's low and manage in between.
Right. You got to have some line in the sand, and that low should not get taken out. Because again, this one came out of a base and it shouldn't collapse all the way back down. So share sizing it, to say, well, you know what, this thing could come down there and stop me out. But if you share size it for that to say, well, I'm willing to lose $200, and you buy enough shares that if it goes down there, you're stopped out and you lose $200. And you could say, well, whatever that is, but you could share side this with the intention that when the next setup comes, like Dan explained it, the next setup, well, then you would add to that position, and all part of your money management. All right. The next one is low. Low entered a bear call credit spread on February 2nd, considering an M top. However, by the end of the day, it formed a bottoming tail. I got concerned because it looked like it was forming a buy setup. Although I exited with profits, would you have considered this an M top?
I don't see any M top, but also point to February 12th for us.
They said on 210. Oh, so they did, Dan. Well, 210. 210.
I thought it was 2.5, but
no, they said they entered on 210, considering an M top, and of course that's not an M top.
Right.
Yeah, I mean, so this M tops just barely take out the high, like just barely take it out and then begin to reverse. They don't move that far above the high. And so this could not be an M top, maybe on an intraday time frame, but to sell a bear call credit spread on a pattern like this is pretty aggressive.
Right.
I mean, it moved up several days in a row. I mean, if you did it on this day and it was expiring tomorrow,
correct, 2 days.
Say, okay, right? Yeah, let's do that.
Right.
And maybe at a 190 or something, give it an extra room. But this is forming a buy setup here.
Right. Look at the 20 and the 50 and the 200. Yeah, that's you're fighting strength. For me to fight strength, it needs to be like that riot. It needs to be climactic, or it needs to be, Greg, show them Piton real quick. I know it's their time, but show them how Piton broke down, and we sold a call spread on that one today.
Yeah.
Totally different setup.
This was a post today in the green room, and it didn't look like this at the time. It was higher, but what caught my eye was the fact it's going sideways, but this green bar turning into a bearish 180, that's like, I looked at that and I said, that going down. It broke here. And then you could see on the 5-minute over here, the market bottomed out and rallied a bit. This went sideways. And I pointed this out in the green room. I said, and look at what happened here. It went down for a second leg and it still couldn't. I said, that was relative weakness. It's like doing exactly what you would hope a stock would do, that you're short or selling a spread against it. So this looks great. For me, I think it's going lower. I mean, unless some miracle happens, there's no reason why this can't go to 120 bucks.
Right. Well, right. Explain that, the price void.
Yeah, there's a void.
no
You don't see the
support.
momentum and the sideways price action. Right? So that's all about a void. The price momentum, there's no consolidation. There's no reference point to look to the left and say, hey, I mean, if you just ask yourself, where would you want to buy this? Where is there some pivot, some congestion? We're all gonna say down here. Well,
That's actually a beautiful 1, 2, 3 you just pointed to.
yeah, yeah, right here, bullish 1, 2, 3.
Wow.
Right. But look at the green bar here. It looked great and it didn't go. And then it looked great, not great, but okay, and it didn't go. And then this one, it was an expression. Put a fork in it. It's done.
Yeah.
It's cooked. All right. Riot again. Riot. Consolidated in January around $30. Okay. For several weeks, then rose to 63. Okay, so it must be here. Yeah. Over the past week, it seems extended. There looks like there's a void to 160.
Yeah, we
Yeah,
covered that already.
That was a second post.
Yeah. Why don't we?
Yeah.
There's a lot here.
Yeah. The other question, good afternoon. Shall we buy on the day of the bearish candle or wait for the gap up to confirm? So this is maybe something you had up there, Dan. I don't know. I posted a comment in there.
If they're talking about riot, it would be the gap up day without a doubt. The igniting gap.
Examine a bad trade on CENTX wide range bar that cleared resistance, a 1, 2, 3. Triggered breakout failure, void, turn monthly. Okay, so look, we talk about this in the green room all the time.
Right.
Look, MTS is based on multiple concepts coming together. So 1, 2, 3 pattern is one concept. Right? Any bar with a wide range bar and an inside bar next to it at the top of the range is a 1, 2 and can trigger number 3. But the location and trend are other concepts. So one of our concepts is that after a greater than 100% retracement, and that's what this is, it went down, like this is a greater than 100% retracement. This is a greater than 100% retracement. The concept says after a greater than 100% retracement, expect a stall in momentum. It's not a fact. It's something historically that happens the majority of the time. And even though this showed weakness and this showed strength, expect a stall in momentum. And this stalled. But then it started going up. This was on the news that everything went down. So a 1, 2, 3 after a greater than 100% retracement is not the greatest high probability trade. 1, 2, 3s happen where they're igniting a move, not a wide range bar ending a move. So simple concept. Of course, now that you know it, you won't make that mistake again. Right? So again, wide range bars igniting a move. Right? You see here, consolidation, moving averages close together, igniting a move. This wide range bar after running a race above the prior high, signaling the end of the move. All right. All right, let's look at BO. XL. Boxlight. Reason. On January 14th, on an igniting bar, there you go, igniting bar, yes. added above February 5th. Added above February 5th. Okay, you go there and then. Okay, you added above the bottoming tail bar, correction bar. Yeah, that's a student. All right, took out the low and came back up. Correction bar again on February 10th, correction bar. Well, that's a wide range one, so not the best, but okay. Add it again. Watch monthly chart for potential head and shoulders pattern. Okay, so I don't know if it's a head and shoulders. It's a base. It's a nice base, and this is igniting on the monthly. It's definitely bullish. It's coming up into this resistance area, which I suspect sellers will be there just because it was there twice before. So it looks like it could get there. Nice ads, nice trend, getting close to its destination. ELTX. So Dan, it says daily uptrend for months, accelerates up, gapped up 3 days in a row. What do you think?
Okay, well, a couple things. Number one is I don't know what his question is, but just a couple.
Yeah, I made a statement. Uptrend for months, accelerates up, gapped up 3 days in a row.
Well, and let me correct that first thing. It's really, well, it's an uptrend once it broke out in late December. Okay.
Been going up for months.
It depends what time frame you are talking about, whether you're going to apply our trail chart that I went over, or if you're looking for a new entry. Yes, it's getting extended far from the 20. It is a bullish breakout. If I were in it, I'd just be in trail mode. As a new trade, too extended. It's too extended. This is one where it could take a week or two to set up for a new trade.
Yeah. It looks like it can go higher, but right, yeah, gapping up several days in a row sure doesn't make me comfortable wanting to get on board unless it had a correction bar. And there's nothing there like that. So it looks like it can go higher. There's lots of stuff out there that looks like this that
but again, I wouldn't enter this as a new trade.
No, there's no pattern.
Well, and somebody just asked you about Okta, which I typed an answer, AKBA. If you just want to really quickly show them what at least that, AKBA, Bravo, AKBA. At least that one was extended, but it's resting like a marathon runner. It's resting.
Right. This came down big. Look at that 50. Yeah. It got crushed.
Yeah. That's why.
And now it's a bio there.
But it's resting. I just wanted to say this is a better picture of a new trade watch than the prior one.
Absolutely. All right. Let's see. DT. Would you jump into the trade over today's green bar high?
No.
Well, yes, I would say no, but depends on how you want to manage it. Meaning, it igniting a move out of a base. You can see the moving averages were tight here. The way it pulled back is not ideal. Right, very steady pullback. So to buy it above that high, you could get surprised and it takes off. Historically, that's not what they do with a pattern like this. But if it was to spend another couple of days going sideways and it had a bottoming tail bar in it, that would be fantastic. So if you wanted to buy it here just to get on board and you bought, say, a third position to get in, and then this is another example, if it popped up a little and made a lower low, it could be a great setup. because it did break out. Look at the volume. Look at the volume. And that move up. So if we look at the weekly, that's all-time highs.
Yeah, no, I love your further description of, I call it a wish list. Yeah, I mean,
Yeah.
if it would go sideways and give a bottoming tail, then yeah, then it's a no-brainer. And it reminds me, Greg, of our MT Live, where he said we're trading the turn, the TURN, and this is not a potent turn yet, but what you verbally described was creating a potent turn.
So one of the things you can do in this platform, you can flag things. I have this set up where I click that and it puts it into a minder on another page. Because this is something that I think is going to go higher. But as I explained, it may not do it with momentum at this point.
Particularly when you showed me the weekly. So I'm going
Yes.
to add it here.
Yeah. See the weekly?
Yeah.
Look at the wide range bar. And it could be like a 1, 2, 3, 4. It'll look different over here, of course, but the gap up on volume. Look, first of all, this is not a $2 stock. It's a $50 stock. And that kind of volume, that is institutions. They're going to keep coming for this. All right. Would you wait for a double bottom on DT? You may not get the double bottom, Tony.
Right.
So, one of the things that I've learned, right, we're always learning, is that we don't always get what we want. So when you understand advanced money management, it just frees up a whole lot of things from all or none, which means you could enter on almost any pattern. And if I said, Sony, you have to enter this today, or you're going to lose all your money. You say, no problem, Greg. I'll buy one share. No problem. Which means like that's not going to do anything for you as far as making money. But I'm trying to make a point as to money management frees you from the demons inside your head of this has to be perfect. Like Al asked me, he just asked, he says, Greg and Dan, regarding multiple time frame approach, all time frames we are considering must agree in order to enter a position. Well, you want the trends to agree, like weekly and daily, but the patterns don't have to agree.
Well, I wouldn't even say trends, Greg. I would say bias.
Right. Bias on the trend.
Right.
Yeah.
Right. It's a pullback. It could be a short-term downtrend. We get our turn in alignment with the longer-term bullish trade that we're taking, and that's the bias is in agreement.
Right. So another question, not quite, statement was on Boeing, entered today at 218.12. So you almost bought the high of the day. Congratulations. But I'm joking. I think it's okay. It's not great because it's at this prior high that was rejected, but it came right back up again. So obviously you have to share size it with a stop below here because it could turn into an M top. But look, it broke down and it came back up and it's going sideways at resistance. That's bullish price action. So I like this. Now, it could be a market weakness that it's come in like this today, but if this goes sideways, right, tomorrow's Thursday, another day, and this triggers above this high on Friday, I think it's a go.
Yeah, we've been accumulating in the sector of jets, airlines, JETS. So this is, moves with it a little bit.
Yeah, that's great.
SkyWest, Delta, United.
All right, which is, if you want to do the ETF, which this is rolling over, there's got to be other things that are weak, but Boeing's a big part of this. Anyway, look, this is sideways here. If you don't share size it below here, right? You could easily get stopped out under that low and it pop right back up again, which would be a correction bar. So share sizing is so important because you can sit through the wiggles by doing that. All right. Let's see. Fuel cell pulling back to the 20. It's in an uptrend. You got to wait for a setup. VE broken the uptrend.
Yeah, fuel cell, I typed earlier also. I didn't like it because the weekly is a climactic cell setup. So there's an example of, you know, we don't have a pattern yet on the daily, but caution on the weekly, that thing has run way too much.
So this is broken the prior swing low, and it's penetrated the 50 on volume. Institutions, if this thing doesn't recover, they're going to start exiting some positions here. You know, because look at the way it's gone up. Look at the volume. Look. And then it recovered. Strength, volume. So this thing needs to get itself turned back around. All right, Fabio is in the room. Hey, Fabio, take a look at AKBA.
Yeah, we did already.
Yeah. We just looked. Dan mentioned that. That looks good. It's consolidating. And Jerry said TMO is a big mess.
Yeah, I typed it was a big mess. I didn't know what he was looking at, you know.
Put spread. He said would have been good put spread last Friday.
Yeah, I typed that already saying yes, it would have on Friday.
Okay. And PLTR says ugly breakdown, but on support in a 50 MA. Could be a small pop over day's high, but swimming upstream. Relative weakness, absolutely. So with something like this, assuming it was actually closed like that, and I'm sure we could probably find better things, but you know, I go to my 5 minute and then start looking at, you know, whether there's day trading opportunities. So you can take 180 reversal on almost anything, almost. One thing's better than another, but this is on the 50 and on some support here. And just then go to the intraday time frame and say, hey, I think this might go up another day, and you can trade it on the long side. And so you'd be looking for the 5 minute, you know, to be in an uptrend, and you're buying pullbacks and bottoming tails and all of that stuff. Okay. AKBA. We look at that? Yeah, we looked at that.
Yeah, twice.
Janet, we looked at fuel cell. All right, Diego. I can't read that, Diego. It says something about a gap. It's in Spanish. Sorry. ISL.
Look at Eugene's GNOG. Looks like a nice short under the low.
Is Twitty ready to go down? I'll take a look. This is in a nice uptrend, and it's in a good sector. Technology communications, it's a good sector. It cleared this high. I like it. Reason igniting bar on February 4th, probably that day. It's actually the 5th. Currently consolidating, watching for a breakout, add position. Well, it's come in today, but so let it do its thing and rebuild, but that looks great. There we go. EISL. Okay. And Twitter. And it's got a wide range bar on the weekly. You can see here. It might be ready to go down. Right? It might be. I mean, look, making the turn is rough. I mean, it gapped down today. This bar isn't even complete. It's in an uptrend. It's really not that extended, having gone sideways for months. So I could not say, you should get excessively bearish on this, but if the market continues to be weak, I'm not sure where it's at right now, but yeah, it might pull back a bunch. Right. Here's one no one mentioned that I saw last night that's consolidating today. Might want to see if that one.
That was on our list yesterday to watch the afternoon, and it ran without us.
Yeah. So it's got room to go. So it's a breakout on the weekly. All right, a couple more. And Greg, I translated Diego's comment. Where did you post it? If you could repost it, I'm scrolling back. There's so many posts, I lose track. Okay.
There's Diego's.
Okay, good. KO entry on 210. Entry. So I'm going to assume, I have to look at it on 210. I'm going to assume a long entry. Above, okay, it had a void to go up, but it went down and filled the gap. I entered on a 2-minute chart, 1, 2, 3, 4 pattern. I don't know. Well, I don't know. You did something wrong. It's a bottoming pattern. They tend to be treacherous. I don't know if I can go back on a 2-minute chart to 210. Oh, well, it was extended. I mean, giant wide bars. That's 210, giant wide bars. So Diego, next time, let it calm down. Look at the size of these bars compared to this. It just moved a lot and it just got wild. So let's do this. And then let's compress this now up 210. That was this day. Look, like it cleared this. I don't know. I would have to look what the market did. Maybe the market went down anyway. There's a bottoming pattern, and it just it just moved too much. I don't know what else to say. Just moved too much. All right. Lou's asking, what do you think of silver and gold? Look at YouTube video every morning. I cover silver and gold. Silver showing relative strength. Gold is pretty sloppy. Waiting for maybe it to turn around. Down here on this last support, you can see the weekly. If it breaks here, it just opens up the door to going significantly lower. So if this can pop right back up again, hasn't done it. Silver is showing relative strength. So this is the one, right, to go with above yesterday's high. AG. There's a silver stock. Look, similar pattern, right? Above yesterday's high. See where it closes today. And HKC looks great. Heinz ketchup. It's got potential. Got potential there.
Actually, I told Debbie that could be a core trade on the monthly.
Yeah.
Or at least $5 gain.
Yeah. It's got a big bottom. Absolutely. Yeah. Fernando's asking, can Bitcoin go to $100,000?
Of course.
I wouldn't bet
anything's
against it.
possible. Right, anything's possible.
I wouldn't bet against it. I mean, it cleared 50,000. There'll be corrections along the way, but yeah, absolutely. So, all right, everybody, we've gone past our 1 o'clock hour. I hope you enjoyed this. I did. We looked at lots of stuff, different patterns, and
Yep.
your ideas. I hope you guys have learned a bunch from it to help you, to learn, what Dan and I do every day in the green room. So look, take that trial for $7. How can you go wrong? So all the best. We'll be back next week. Bye-bye.
Keep trading, everyone.